Hi, how you doing? My name is Trader Tinashe. Today I'm going to be talking about trading. So the first thing I'm going to talk about is having a trading strategy. There is a reason that I took so long to start making good figures, good numbers. Back in the day, I would just enter, make something, maybe 100 in like a week. I'll be happy with it, and sometimes I'll even lose 200 the following week. But I still managed to get up the next week and make money. So yeah, those are the first stages of trading. But eventually you come up with what you call a trading strategy. So that's what we're going to talk about today. Trading strategy consists of three things. The first thing is knowing when to enter a trade. The second thing is knowing when to exit a trade. The third thing is risk management. So of these three things, each of them have their own topics inside of them. So when you enter a trade, you don't just enter a trade because you think it's going to go up, or just because you saw a chart pattern, you saw a pattern that you saw before, and then you enter. You have to first know when you're going to exit that trade. You have to first know how much money you're willing to risk on that trade and how much money you will lose on that trade, and accept it inside that I'm going to lose $100 on this trade, or I'm going to make $300 on this trade, then take the trade. So if you are not willing to risk $100 first to take the trade, you have to count it inside you as the money that's already been lost. Because the only way you make money on that trade is letting it reach TP. I'm going to teach you how to hold those trades, because it doesn't make sense to risk $1,000 and you see your account going into minus 900, minus 700 just to make 200 profit. It doesn't work that way. That's not a proper trading strategy. It might work for some people, yes. People make money gambling off it, but that's not how to trade. So I'm going to teach you about my strategy. My strategy, this is how I came up with my strategy. I decided to lock in for a month. I can't say a month, sorry. I decided to lock in for some years, looking at the markets every day, coming up with a strategy. I learned from YouTube, I learned from PDFs from different people. You take it, you implement it, you see where they're going wrong. If it doesn't work for you, you delete it, you look for something else until you come up with a trading strategy. So you might say my trading strategy is just looking for flags, but today I'm going to teach you something. You don't just look for flags. A flag is a chart pattern which you should use as a confirmation to a trade. The first thing you look at is the trend, right? So when you're looking for a trend in a trade, you start from a bigger time frame going down, which I'm going to explain to you soon enough on the computer. And I'm going to tell you a lot of things about the reason why people don't make money, the reason why people keep losing, the reason why people exit too early. They don't know what trading is, they don't know the whole concept. A lot of things determine on how you become a professional forex trader. So I'm working on a book that's called LOT, LOT. So this book, LOT, will be standing for Locked On the Markets. So it's Locked On by Trader Tinashe, which is LOT or LOTT. So locked on, it means you're locked on the charts. In this book, I'm first going to release an online version of the book, and then later down the line, I'll have it mailed to you after you purchase it, of course. It will be on my website, which I'll just leave a link below the video. After I do the analysis, you can look at the video, and it's very cheap. I'm pretty sure everyone can afford it. So what this book is teaching you is my strategy and how to create your own strategy. You don't just take someone's strategy and then put it on your computer or on your phone and think that you're already a millionaire. It doesn't work like that. Everyone has to have his own strategy. You might copy it, but copying someone's strategy, it means that you have to copy everything about it, exactly everything about it, so that it works for you. Because that person creating a strategy, maybe is creating a strategy for an account with 5,000 and your account is $50. So it won't work for you. It won't. So I'm going to teach you how to take someone else's strategy, change things, and make it your own strategy, your own personal trading strategy to make money with it. The first thing we're going to talk about in this strategy is the trends. Before you look for an entry, you have to look for the trends, how the market moves, how the market reacts to certain points. We are going to talk about it on the charts just now. So the second thing we'll look at are chart patterns. We're going to explain chart patterns. We're going to give patterns. I'm going to tell you how each and every pattern works. The third thing you will look at is the breakout and the retest, which is something that's very important when it comes to trading. You really have to understand how that moves, how that works. The fourth thing will be the smart money concept. The order block strategy is part of my strategy and it really works. Then the last but not least, the last thing you look at is your risk. Your risk. to reward, your risk management, your risk, the whole risk assessment. You're going to look at it and learn how to differentiate your strategy from someone else's strategy. Other people may have that same strategy but making money with it, but you have that strategy but not making money with it. I'm going to teach you everything about analyzing the markets from a trader's point of view, not using bots, not using the like indicators. We don't use those. We don't use indicators. We don't use bots. We just look at the market professionally. We take the trades professionally, and we make money professionally. So after that, we will hop on to learning. When it comes to learning the strategy, it's me taking you through everything that I've been looking at and what I've done until I became a good trader. After those 5 confirmations we talked about, we're going to have a special section for some things that won't come up when you're making yourself a professional trader, like premium discount. No one can teach you that except I. We can talk about premium discount, we can talk about rejections, we can talk about candles, we can talk about candle formations, we can also talk about the harmonic strategy, harmonic patterns. These are extras that you may add to the strategy and it will work for you. So everything I talked about should not be taken as a strategy by its own. So if we're going to talk about chart patterns, other people can just trade chart patterns, and we know a lot of people will just trade chart patterns and make money. But I'm going to teach you how to have a normal trading strategy with confirmations. So you choose 5 confirmations. The strategy is to choose 5 confirmations of all the things I talked about. And out of those 5, before you look for a trade, you look and see if those 5 confirmations, at least 4 or at least 3 have been hit or are correct, and then you can enter a trade. So if just 2 confirmations are okay and 3 are wrong, you just mark your trade wrong. So that's what we're going to be talking about today. And we're going to look at it as a whole and see how you can get the strategy, how you can create your own strategy and start making money. So before we hop into that, I'm just going to tell you about this weekend. This weekend, I was trading Boom 600 from Saturday morning until Sunday evening. I only took 4 trades. We managed to make a total of, it could be around 3,000 just this weekend alone with just 4 trades. So I'm going to teach you how to look at these 4 trades and make you confident such that when you on your own, you can take the same 4 trades on your phone and make money on the same 4 trades and enjoy your profits. So the trades were on Deriv Boom 600, the Deriv platform Boom 600 index. So looking at these trades, it was just a trend I was following, buying low, selling when it gets to a TP, or selling when it gets to a high, selling at a high, exiting at the bottom. Overall, the trend was in a downtrend, like I'm just going to show you just now. Okay, you can see this is the 30 minutes time frame. This is the time frame. This is my trade. This was the first trade at this low. We exited here. You can see this was our high right here. We exited it. We entered again right here. We entered the sell because it came back and retested this parallel channel. We entered the sell and exited on this low. You can see this low. We made money. Then we took it again right here. This was the second entry because you can see that it came and started going down, right? After it started going down, it came up again. So other people may enter my exit, but other people hadn't entered yet. So we took another trade here. This was our TP right at the bottom here. Our TP was to make it reach this line, this bottom channel. So it reached, and also when it reached our 50% here, it retested it, and after it reached our 50% line, which is this one, we knew that it was going to touch our previous low, which was our swing low, which was this, meaning this was our TP. You can see that our TP was hit. So that was our trades for the weekend, and we managed to milk the markets on this. Yeah, so that's my strategy. That's how I trade. That's how I made money this weekend with that strategy. More than 3,000 bucks on the same strategy with just looking at my screen from my bed. Didn't even have to go out, set my trades in the computer. They gave me alerts and then took the trades. Showed made an easy 3,000 just by sitting at home. So you could be doing that too. So, but without a strategy, you're just gambling. So like I said, the link will be just below. You open the link, you look at the strategy, you take it, you start making money with it. So that's exactly everything you need to know about lots, the strategy I'm giving. The link will be just below. So make sure you're gonna get the book, read it, understand how everything works, then start making money. Okay, you can see this is the 30 minutes time frame. This is the time frame. This is my trade. This was the first trade at this low. We exited here. You can see this was our high. right here. We exited it. We entered again, right here. We entered a sell because it came back and retested this parallel channel. We entered a sell and exited on this low. You can see this low. We made money. Then we took it again, right here. This was a second entry because you can see that it came and started going down, right? After it started going down, it came up again. So other people may enter, my exit, but other people hadn't entered yet. So we took another trade here. This was our TP right at the bottom here. Our TP was to make it reach this line, this bottom channel. So it reached, and also when it reached our 50% here, it retested it, and after it reached our 50% line, which is this one, we knew that it was going to touch our previous low, which was our swing low, which was this, meaning this was our TP. You can see that our TP was it. So that was our trades for the weekend, and we managed to milk the markets on this. Hi guys, today I'm going to be analyzing the markets with you from 900, the trades that we took this weekend, and then I'm going to give you another trade that I haven't took yet, show you the next trade and how we will maximize off that trade. So this was the trade, you can see that's on the screen right now. So allow me to delete everything and start over and analyze the market with you from top to bottom. So you can see that this was the trade. This was how the markets were looking. So the first thing you do when you are looking for a trade is to first figure out which trend the market is in. Is it in an uptrend or a downtrend? So I'm just going to briefly go through the trends and show you what you'll be expecting when you are in an uptrend and what you will be expecting when we are in a downtrend. So I have my brush here. So when the market is going up, it creates higher highs and higher lows as it goes up. When it starts going down, it breaks the structure. You can see that this was an uptrend. It breaks the structure, then it starts creating lower highs and lower lows. And then when it wants to go up again, it breaks the previous high. It starts going up. You can see that that's what the market is just going throughout. So when the market only reverses when it reaches a certain point, which we will talk about. So the certain point is these reversal zones, these previous highs, previous lows. You just take them out, you place them here, you see that the market will eventually reverse on them. You can see that we just placed it here. We placed this here, but you can see that it reversed here. It did something here. So yeah, that's how the market moves, guys. So going to continue going up. You can see that we're now going down. It was now an uptrend. You can see that it was going up, then it broke our structure. It tested this high right here. It was retested and it started going down. You can see that it's creating lower lows as it goes down and lower highs. See that it came up, tested this, went down again. So that's the whole concept of trading. This was broken and then it went down. So the reason it reversed here is because if we place a line here, we drag it, you can see that this was a very strong support. So it respected that support like it has to do, went up again, created a double bottom, started going up, went up, broke this high, went up again, then retested this zone, went up again. So when it got here, we would have put our line here on this previous support. We knew that this was an exit zone, and then it didn't manage to break it. It came here and then faked out, went back, broke this uptrend, means the market is now going down. So this was the start of the weekend. So when it got here, it meant that it was now time to enter a trade. So we move in deeper to the market, and I'm going to explain how I looked at it and how you can also look at it when you're looking for your trade. So allow me to delete everything and start over. Right. The market was in an uptrend. This is an uptrend. You can see that it's creating higher highs as it goes up. And then it came, right? When it came down, this was our previous high. This was our previous low. So we know that the market, either the market has to break up, either the market has to continue going up, break this, continue going up, retest it, and continue going up. But in this case, it broke above, broke below, retested below, then went down, then it came up. So now we expect the market to break below, continue going down to the next low, which is here, or this one, or this one. Or it will come here, retest this low, and go up, and break, and retest, and keep going up. That's how the market moves, guys. That's the simple pattern of trading. So with that being said, we are still looking at trend analysis. This is part of trend analysis. In the In the book, we'll go deeper and explain all the reasons, how you catch these higher highs, how you catch these lower lows, what makes a lower high, what makes a lower low. And just with that PDF alone, you could easily start making money and create your own trading strategy and make money with it. So the first thing you do is you take a trend line. So the market will have a lot of noise. So when we're talking about noise, we're talking about everything that's happening that we're not worried about. That's noise. Everything like this. We just want to know that if the market was here, how could we find our first trade and how would we get our next trade? So just like that, let me delete it again. We know that before everything happened, we were in an uptrend. This was in an uptrend. So to remove noise, you use the line chart. You can see that with the line chart, you can see exactly where to place your trend line. We're going to talk about where to place the trend line in the book as well, how to put a proper trend line and what makes a proper trend line. We're going to talk about it as well. So yeah, after swapping it to line, we put it back to candles here, and then you can see that this was an uptrend. Then it got here, it broke. This was a break of structure. Right. This was our high. So this was our low. This was our second low. The market closed below our second low and went to find an area of influence, which is this one. After finding this area of influence, it started going down again. So you can see that here it created the head and shoulders. So we're expecting it to reach here. So after creating this head and shoulders, the next thing I was expecting the market to do was reach this low. So it got to this low and then it went down again. My entry was on this low because I knew that if I buy here, I would exit right here. Right. I would exit right here. That was my first entry. So I put my trades like this. I put an entry here, put my exit on this line, drag my stop, drag my trade something like this, right? And then put my stop loss below this low. Right? We can't use this low or this low because that's where we entered. We use this low, so the market has to be this low, this low. We had a 1:3 risk to reward ratio, meaning if I was going to risk 100, I was going to make 113 profit. So it wasn't bad, but it wasn't good as well. So it was a small trade, and this is the 50-minute time frame. So something that you would not hesitate to take. So we entered here, went up, didn't reach our take profit. Our take profit was somewhere here, sorry, on this high. Didn't reach our take profit. So it was a 1:1.5 here. Didn't reach our take profit. Then came down. Then came down again. Didn't reach our stop loss. Then went up to reach our TP. You can see that the TP was hit. So we go down. We have the first trade. Then the second trade. We now knew that the market, looking at the second trade, we were now here. We now knew that the market was respecting this zone. So the next thing you would do is place what you call a parallel channel. You touch the high, the swing high, you touch the second high, then you let the market go. So it would appear like this. You touch the first low, which was right here. So we know how the market moves in a channel. We know how the market moves in a channel, right? Okay, right now we are on the 30-minute time frame. We take our parallel channel, place it on the first high, we place it where we found our take profit right here, and we let the market go. We place it on the first low, which is here, and we let the market go. So now we know that the market is now in a channel. So when the market is in a channel, it has to react to the highs and lows of that channel. So it's considered a proper trend, right? Okay. So a channel looks like this, right? So if a channel looks like this, it means that the market has to respect it. If it's coming from the top, it has to touch the low, touch the high, touch the low again, touch the high, and keep going down and up. That's how the market reacts to a channel. So yeah, we're going to further explain how the channel works in the book. So yeah, it would be a very good thing if you get the book as well. So like I said, place the parallel channel here and let it go down. My network is a bit slow, so sorry for the dragging. Now we have the channel, so I automatically knew that the market would respect this, go down and touch this line. Right after touching this line, if it breaks it, it means it will continue going down. If it doesn't break it, it will continue going up. So that's how I was looking at the markets. So just with that, I gave my second trade. So my second trade was a short position from here. And the take profit was on this line, the bottom channel. Then my stop loss was just above the previous high, which is this. So I'll place my stop loss there. I entered the trade, it started going down, but it didn't reach our take profit. But I knew that it was going to reach our take profit after retesting on this line. So there are other confirmations you could look at. You could look at the this inner low. It was broken by this low, meaning that it confirms a downtrend, right? So with just that alone, I also gave another trade, right? So you can see that it's the same instrument, but we had more than 3 trades so far. This was our second trade with the same stop loss right above there, but the TP has to be when it touches the line again. So my TP for the second trade was a bit lower. We entered another trade here, it started going down. Then when it's on its way down, it has to respect the 50% line, which is this line. You can see that's going through the middle of this line. That's our 50% line. So you can see that it came to our 50% line, tried to break it, broke it, then retested it right here. This was our retest. That's when we gave the third trade. Allow me to indicate the third trade for you. Enter the third trade here. Then our take profit was just below this. Our stop loss was above the previous high. Then our take profit was matching this swing low. So you can see that we had 4 perfect trades on this pattern alone. 4 perfect trades. The first trade was a buy, which we indicated here. Our first trade was a buy, which the take profit was here. The stop loss was there. So yeah, these were the 4 trades we took during the weekend and made a good bunch of money. So with this strategy, guys, you could just copy almost everything that I teach. So in this trade, you only used 2 confirmations. We used the parallel channel confirmation, which is found in the trade section of the book, and we also used the chart pattern confirmation and the breakout confirmation. So this was a breakout. This was a breakout too. It broke the 50% line, also broke this line, and this was a retest. It went going down. It started going down. Same applies when it reacted to this channel. It broke the channel, went up, then broke it again. So right now we'll be looking for a sell. But let me just give another trade. So let's look at BOM 600. So I'll give you the trade for the day. Right. So this is BOM 600. The first thing we always do, like always, is to look for the trend, right? So right now we can tell that the market is creating lower lows and lower highs as it's going down again. So expecting the market to go down again, retest, then I don't know what happens after. We have to analyze. So that's how we're looking at the market right now. So let me delete this and find our trade. So we could use the channel. If we're using the channel, we have to touch this high, touch the second high, touch the first low, let it go to the second low, right? That's how we use the channel here. But you could say for this trade, let's not use the channel, let's use something else. So I'm gonna use the breakout and retest for this one. So yeah, the market currently is going down with an auto that's going down. Take our horizontal line, we touch the previous low, which is here. You can see that the market started going down. So as the market was going down, you can see this was our low. It came, then broke our previous low. So every time the market breaks a low, it has to retest to confirm that it was a break. If it didn't retest and started going out, we would call this a fake out. But in this case, it retested, meaning the market is not going up. So when it retests, it has to retest this zone, this line, and reject it. As you can see, it was rejected. Or it will have to retest and find a fair value gap or some kind of confirmation. Another confirmation is
a trend line. We could place a trend line like this. You can see that it was retested again. The fair value gap, if you look closely, I think you'll find one which is right here, somewhere here. We'll find a fair value gap, but on a different time frame, maybe 30-minute time frame. Then the other thing we'd look at to confirm that there's the area of influence. So the area of influence, we will take a rectangle. Then we would find the place that the markets were closed again. You can see that you can even start here. You see that it was suspected here, it was suspected there, it was suspected there again, there. So this zone is our area of influence. So what we're waiting for was the market to break this zone, retest it. You can see that the market just retested this zone. So we can now place our sell position. Our sell position would be here. Our stop loss just above this zone here. Our TP would be on this low, right? But since I am the one teaching you and I'm teaching you secrets on how to make money trading, my take profits, I would take a channel like I did before, a parallel channel, place it on this high, place it on the second high, place it on the lowest low. We have almost a 1s to 3s to 1 ratio, meaning for every $10 you invest on this trade, you're going to make 30. Just like that, I've teach you the strategy. So in the PDF, in the book, which will later become a physical copy, but for the meantime, you can pre-book it, you can pre-order it. It's still a PDF format, and I'm working on it. I'm finalizing the final touches, and you could learn everything that I just taught. You would have your own book, you can print it out, and you could also work on becoming a profitable trader. This book is not just for people who are learning. This book is to improve your trading strategy. It has different strategies in it. You just take each and every strategy, you combine it, and make your own. You take each and every other strategy, use it as a confirmation so that your strategy will be unbeatable, and create what you call an approved, sorry, what do you call it? We call it an approved win rate, yeah. So a perfect win rate is maybe 70%, because no one is as good as 100%. Meaning at 70 to 75, it means 75 of your trades, 75 of every 100 trades you take are hitting TP before hitting stop loss. So each and every trade you give should have a stop loss and a TP, meaning you only exit at stop loss or at TP. So with that, you should create what we call a risk. I just said it now and I forgot what I said. Right, a win ratio. The win ratio is the amount of trades you take of every 10 or of every 100 and make it a percentage. So if you're winning 3 trades out of 10, if 3 trades of your trades hit stop loss out of the 10 trades you give or you take, it means that you are still learning, you still have a little more to catch up on. If your win rate is not 50%, know that you are there, but it's not as good. But the moment you start hitting 60%, 70%, know that you're a perfect trader, and the only thing that's limiting you is now the amount of money you risk. After creating a perfect win ratio, you can test it on demo. The next thing I would advise you to do is now go for bigger risk to reward ratios and go for bigger trades, or focus on a single instrument. You can see that this weekend we just focused on one instrument and made a huge amount of money on one instrument. Try to focus on an instrument, completely rip it off of all the money is given out, then move to the next instrument. You can trade it for a week, just one instrument the whole week. It can be gold, it can be Euro USD, it can be boom, it can be gain. You rip it off all the money, then the next week you move to another instrument, just like that, and you eventually get it. So yeah, that's all there is to learn about trading. So make sure you please subscribe to the book. You're not going to pay much. It's just I'm going to release it at like $35, and yeah, you just get your copy. Then when the official printed copy is out, you also receive it and to your address. It can be international. If you're international, you'll find a way to mail it, or you can just print it there. Then you get copies from wherever you are. So yeah, that's how we're going to release the book. So make sure you have the book before it comes out. I will release it soon. So right now I'm working on the final pages, and it's going to be perfect. It's going to be a game changer for every trader who wants to learn, who wants to understand everything about everything they